What's up, everyone? Dylan here. I wanted to hop on to do another episode of the weekly analysis video. With that said, we'll hop right into it. So, last week's price action was very choppy and orderly. If you took last Monday's high and low, that's exactly where the majority of the price action was chopping in between last week, right? So the sellers did a very good job defending Monday's high, and then the buyers did a very good job defending Monday's low. Okay? Despite last week's price action from being very choppy, it was the first week in 5 weeks that the S&P managed to close green. Okay, so despite there being very lackluster direction, it was still a good victory for the bulls, something that has not happened in over a month. Okay, so going forward, we have seen a nice rally, right? Today, the NASDAQ gained over 2% and the S&P gained 1.7% or 170 basis points. So the bulls have been doing a very good job since Thursday, March 13th. It has not been straight up, but the bulls have been doing a very good job in sustaining value, defending areas of support, right? Again, that last Monday's low, that area held 3 different times on 3 different days. So this is a very good piece of context that should not go unnoticed. Now, is there a coincidence that this area, right, what marked March OpEx, right? This is something that we've been talking about in a few of my different videos. So as a reminder, these were the dates to look out for, right? February 21st, which was Feb OpEx, that basically initiated the down move, okay? Then you had February 28th, which was the MSCI rebalance, which caused a little bit of a pivot where the S&P managed to rally about 3%. It did not sustain value and headed lower, right? This recent move started on Friday, which was March 21st, aka OpEx, March OpEx, and the S&P 400, 500, and 600 rebounds. So let's go ahead and mark those dates, right? As I've noted in previous videos, those dates are very important because they give a pretty solid edge where the overall sentiment in the market can really pivot, right? So depending on the price action leading into those dates, it can be a very good area or date to lean on in terms of which way the trend will go or continue or pivot. Okay, so February 21st was the first one, right? And as I noted, that was the area or the date that kind of started the big moves to the downside. The second date was February 28th, which marked a very important rebalance. And as I said, that date marked a nice 3% rally from the lows to the highs. Obviously, it did not sustain value. And then where was the third date? The third date was on Friday, March 21st. Okay, so let's go down to, say, a four-hour chart. And you could see that these areas have been very pivotal. Okay, now, very important to note, on Friday, right, despite it being a very key date, and I've talked about it for numerous weeks, it's worth noting and being transparent that the action leading into it was pretty dull. So it wasn't, I didn't have a ton of conviction that would necessarily create some buying pressure or a pivotal moment in the downtrend turning into an uptrend, right? Because like I said, the price action leading into it was very choppy. Okay, so the best case scenario for these specific dates are when you have sustained trend moves into them, then usually they are very pivotal. Okay, so the next key date is April 2nd. Okay, April 2nd, what is that? you may ask, and I will tell you in a second. Let me just mark it. So April 2nd will be the the next very important area to look at, okay? The reason being is the fact that that is what Trump calls the Liberation Day. So basically, this was from my floor broker, just some market commentary that I posted in the morning. Trump also has noted that April 2nd will be quote unquote Liberation Day for the U.S., unveiling so-called reciprocal tariffs seen as retribution for tariffs and other barriers from other countries, right? So on and so forth. So that is going to be a very, very key date to look at. Tom Essay also noted April 2nd is the day U.S. reciprocal tariffs are announced, and it will be a very important day as we will hopefully get a fuller view of the administration's trade policies, and from there begin to determine the outlook for stocks and other assets. Okay, so in my opinion, that's going to be a very, very important date. Now, some can argue that, hey, Dylan, a lot of people know, are at least have the expectation of what's going to happen that date. So is it too much of a crowded date, right? Usually, if everyone and their neighbors and friends know what is particularly going to happen on a certain date, usually the opposite occurs. Okay, so I'm not jumping on this video and telling you that I know exactly what's going to happen on that date. Instead, I'm telling everyone that's watching this video to look out for the price action leading into that date. Okay, so this is a scenario that I am going to be looking out for. Okay, hopefully for the bulls, right? If you're a bull, hopefully the ideal scenario would be a move to the upside leading into that date, okay? So ideally, in the very, very near term, the bulls would want to defend dips above last Monday's high, right? Again, last Monday's high marked 2 or 3 other areas of resistance where the sellers were doing a very, very good job last week defending, okay? Then last night, overnight, the bulls managed to push value above that 57.60 area and sustain value to the upside where dips were getting bought above there. Going forward, if a pullback occurs, right, in the next few days, in the next week and a half, ideally the bulls need to defend that 57.60 area where previous resistance would turn into support, okay? And if you guys recall, one of the other levels that I talked about on my latest videos was this gap fill at 58.22. I still have it on here. You could see it filled that today and then kind of failed there. So, I mean, it's only down 9 handles from that gap fill area, but, you know, it's an area that the sellers have defended so far, and I would not be surprised if we see somewhat of a little pullback closer to that 57.60 area. But ultimately, the bulls would want to defend that previous resistance. Okay, so let's just assume that that's going to be the case where pullbacks get defended above 57.60. What I would look for then is for that gap fill to get broken, right, taken out. The bulls managed to sustain value on the S&P, right, maybe break above, kind of pull back to that area, and then ultimately rally into April 2nd, which is that key tariff date, okay? This is what, like I said, this is an ideal hypothetical scenario. What I am hoping for is if that were to be the case, that the NASDAQ would come into that key upside resistance that I'm looking at, okay? And when I say that key area, I mentioned it last week on the last video that I did, right? So the 50% retracement on the NASDAQ futures between the high of February, right, the yearly high, and the recent lows from last Monday, right, also line up with the 200-day moving average almost perfectly. You see the purple line, right? Almost perfectly lines up with the 50% retracement. which lines up with, call it 20,934 is where the 200-day moving average is. So that's going to be the key area, in my opinion, the most macro, the most important level going forward to the upside that I will keep an eye on. And listen, if that gets tested right at April 2nd or slightly beforehand, that's going to be very, very, very important to assess price action around. Okay, so that's what I'm hoping for. Ideally, and in my opinion, that would set up for a high probability trade to take in theory. Okay, so that is what I'm looking at going forward. Between now and then, the key event this week is PCE on Friday morning at 8:30 a.m. Eastern Time. But again, very, very near term, I would look at 57.60 to get defended, right? If that does not get defended, that essentially puts price back into the choppy area that it was in all of last week, and basically would hint that the market is weak. And if that were to breach, right, if 57.60 were to breach and the sellers continue to, push price to the downside below there, the next level down would be that correction area and the previous swing lows from September again, right? And that's a level, those are levels that I've gone over in previous videos. So 57.60 near term, the bulls want to try their best to defend that, right? You want to see that dips get bought above there, ultimately allowing for price to get bought above 58.22, which was the gap fill from March 7th. You want to see price sustain value above that gap fill, ultimately heading into the 50% retracement on the NASDAQ, which lines up with the 200-day moving average, into April 2nd. That should be a pivotal moment if that area is tested into April 2nd, where I would not be surprised to see a pivotal move to the downside. Okay, so obviously I have no idea what's going to happen between now and April 2nd, but if this scenario that I just covered were to happen, that would be an area that I will definitely look to put money behind and take an actionable trade idea off of. Okay, so hopefully this video was helpful. Give some key dates to look out for, some key areas to look out for as well, and ultimately give you guys an idea of overall price sentiment and which party is in control, being the bulls and the bears. So that's it. If you guys have any questions, feel free to drop a comment below, and I'll talk to you guys soon. Peace.